All right, so now we're going to go over the 4 types of credit. So there's revolving credit, charge cards, service credit, installment credit. So with revolving credit, you are giving a maximum borrowing limit. Excuse me. You can make changes up to that charges up to that limit. Now you must make a minimum payment each month, but otherwise the amount that you pay can be any portion of your outstanding charges up to the full amount. So if you make a partial payment, you will carry forward the remainder of your balance or revolve the debt. So like an example of revolving debt is your credit cards. Now there's charge cards. Now these are commonly issued by retailers for use exclusively in their establishment. Charge cards are relatively rare these days, but charge cards are used in much the same way as credit cards, but they don't permit you to carry a balance. In most cases, you must pay all your charges in full every month. So, these are store cards, like your, for all of the people that, have, very high spending habits, you know what I'm saying? You can, and shopping habits, your Saks Fifths, your Nordstroms, your Macy's cards, things of that nature. So you have service credit. Now these are just, service providers such as gas and electric companies, cable and internet providers, cell phone companies, and gyms. They all have like their credit agreements. Now these companies provide their service to you each month with the understanding that you will pay for them after the fact. Installment credit. This is a loan for a specific sum of money that you agree to repay, plus interest and fees, and a series of equal monthly payments. Installments over a set period of time. Now, these are your student loans, car loans, and mortgages. These are like all examples of installment credit.